right, guys, welcome to KenorKennot. I'm super excited. My heart is pumping really hard. I've got a very special guest today. His name is Lobo Tiggre. I'm super excited because the world now, with everybody being so emotional and so irrational, it's really nice to have somebody who can provide an objective and dispassionate analysis of everything that's going around. Thanks for being here, Lobo. I really appreciate it.
Well, thank you, Ken. I can't promise you objectivity. I am human. I'm not a Vulcan. But I do try to remain as dispassionate as I can, and I do try to look at the facts, not what I wish, not what I hope, but what is, and go from there.
All right, so my first question for you is your current outlook on the gold and silver environment and the sentiment surrounding the precious metal.
Well, the first thing to say is that I know that right now all the rage is the cryptos, and there is liquid money that chases around whatever the flavor of the day is. And I'm not saying that any of those things are bad ideas. So please don't hate me as an old baby boomer who likes these old-fashioned metals, gold and silver. It's not the only thing. But these are commodities that I understand well. And these are assets that I have made money on before. And the metals themselves are not really speculations or even investments in my view. I think it's an important distinction to make. The metals are things of physical value. You can use them. And gold is not just a pet rock. It has uses in industry, and jewelry is a legitimate use. Other uses, silver has many more uses, which gets to your question about the outlook. But I just think that's really important. I have personally experienced in my life, a financial crisis where having access to that last safe refuge of bullion, physical coinage, enabled me to feed my family when everything else failed. And I've had experiences with high inflation and devaluations, which I think a lot of Americans have not had. So in my mind, owning bullion it's not a gamble or a guess or something. It's something that I know is solid and has saved my butt before and my family's. So that having been said, I am a speculator. I think the markets are extremely bullish. If you look at things I'm sure that your audience has at least heard of, or thought about, all the money printing going on all around the world, negative interest rates, which highly correlate with higher metals prices, the easy policy of the Fed and the ECB, the now really, we thought there was record-breaking money printing after the crisis of 2008. That's nothing compared to what the United States government is doing now. So all of this fiscal and monetary context is extremely bullish for monetary metals, specifically gold and silver. I may be bullish for other things as well, but like I say, these are the things I know and understand. Maybe Bitcoin outperforms gold again. I don't know. I don't know, but I do know that this context is extremely bullish for gold and silver. And then more to the point of your specific question, in every bull market for gold and silver we've had since the dollar really divorced itself from the monetary metals in 1971. Every single time, gold has gone up first, silver has lagged behind, and then more than caught up with gold on a percentage basis. There's a 100% pattern. Every single time, silver catches up, more than catches up, and peaks on a percentage gain basis above gold. That has not happened yet this time. So people are worried that last year, 2020, was the peak, right? Gold went up and it's been down for months. Oh my gosh, months. How can we wait? History tells us, financial history tells us that silver has not yet confirmed that peak. This suggests to me that the peak is yet ahead. And certainly, at least for silver, it would be the first time, literally the first time in 50 years, if silver does not hit a new all-time nominal high at least. It will be the first time that fails to happen. So that makes me extra bullish on silver.
And on your website, I'll link to it in the description below for those who want to read. You have a technique that you call the upside maximizer, which tells you what to do when you're performing, when you're on a bull run, so that you can maximize your profits and not get out too early. But when you're dealing with the junior miners who, you can see 50% pullbacks on a normal day, how do you use the upside maximizer with that? Because if you're not sure and you do a 2 times upside maximizer, that's like 100%.
But I would offer a slight correction in that 50% correction in a day is actually not normal, even for a junior.
Okay.
If a stock goes down 50% in a day, something happens.
Not a day,
right?
not a day. Like maybe over a couple months. Yeah.
okay. But so I'm just saying, there's volatility and then there's volatility.
Yeah.
And the idea of the upside maximizer, it's a form of stop loss, but we don't use it as a stop loss. The idea is you put it on your big wins so that instead of taking profits too early, as you're saying, you just let them ride as long as the volatility is normal. And then when they exceed normal volatility, then you take profits. Now, take profits doesn't have to mean selling everything. In fact, it rarely does for me. When I execute an upside maximizer, I usually just, depends on how bullish I am, but I usually want to just get my initial investment back. So let's say the stock's up 3 times over what I paid for it. If I take my initial investment back, I still have twice as much money still in the stock after having recovered my initial investment. But now I have no risk, none at all. Like I got all my money back, including fees, everything. So, if the stock keeps going up, I still have plenty of great exposure. But if it does go down, if you're 50% a day, or, mine gets nationalized or something like that, right? I have no risk. I can't lose. And so that's the beauty of it. So the key point there is that, executing an upside maximizer, the report is available for free, as you pointed out. Anybody can download that for free. You don't have to sell everything. It's not a stop loss. It's a gains lock. It's about making sure that you keep your gains and you don't lose your initial investment. Or let's say I'm less bullish and, I think the stock has gone up higher and faster than I thought it would. And my upside maximizer is triggered. Well, at that point, I might take the 2/3 instead of the 1/3, or I might sell it all. I have different options. You can make your own choice depending on your own outlook, how the market looks, all kinds of things. The upside maximizer, all it does is really remind you, apply your discipline. And if you have a big win, don't let it slip through your fingers.
So what's the time frame on your volatility of your upside maximizer? Do you look at the fluctuations in intradays or weeks or months at the weekly closes or monthly closes?
I'll use daily closes, not intraday, because you're right. On a daily basis, these things can be super volatile. I don't know that I've seen 50% without news, but I have seen 20, 30% daily surges with absolutely no news. Just like, some crazy broker had to get out, and sold everything, or some person who really wanted it and chased the stock like crazy, and then it settled down. So I use closes.
Okay.
But then I look at the time frame, and the way I've described this in the report is I want a relevant time frame. I want to know what is normal for this stock in the current context. And most of them, you can eyeball this on the chart. Look at the chart and you'll see, oh, well, last year it was doing this, and then they made this discovery and it jumped up, and since then it's been doing this. Well, that's the relevant context. What it's been doing since that discovery, there's a pattern there. And maybe it fluctuates 5-10% within that. So then if it exceeds that 5-10%, that's time to start thinking about executing an upside maximizer. Whereas what it was doing before, that's not really relevant. It was a different story back then. So I can't say it's 1 month or 6 months. It's more like, what has the stock been doing? What's been its typical volatility in the current context of what the company is doing right now? And so I would say it's usually no less than a few weeks. In fact, I have had some stocks that I owned before that big jump, right? And suddenly the story is different. They made a discovery or something happened. And it's a bit of a judgment call. At that point, do I want to put an upside maximizer on? I don't know what the new volatility is yet, right? The old volatility may not apply. So I may just watch it for a while. But at the end of the day, this is a very simple thing to keep in mind for the audience. At the end of the day, there's not a single formula here. There's really no wrong way to do the upside maximizer, because we all have our own tolerances for risk and so on. The only wrong way to do it is to not do it at all, right? To just let the money ride, and then boom, wake up one day and you've turned a big win into a loss. That's what we don't want to do. So
do you see any potential bearish factors in the silver market now?
What could go wrong is, we don't want to convince ourselves we have to be right and imagine that we blow the future, that we know the future and blow it. So yes, things could go wrong. If I'm wrong, if for the first time in 50 years, silver does not catch up to gold, and last August peak, that was the peak for the monetary metals in this cycle, that would be bad, right? They'll continue going downwards. I don't think that, but that could be a way to be wrong. Another way I could be wrong, particularly about silver, would be suppose that especially with Basel III. I don't know if the audience knows about that, but there's new international banking regulations going in that classify gold as a tier one asset for banks to have on deposit. That applies to gold only. So one thing that could go wrong would be, let's say the world decides to more and more see gold as, okay, you know, gold has an asset value like money. We'll grudgingly admit that gold could be seen as a form of money, but not silver. Silver is just an industrial metal, right? We use it in solar panels and batteries and all these other things. We don't even, you know, central banks don't keep silver anymore, just gold. So silver is not a monetary metal. If that happened, and then if the economy post-COVID and so on continued to struggle for many years and industrial metals went down, if we had a deflationary scenario that affected silver as an industrial metal more than gold as a form of money, because in deflation, money gets more valuable. So if gold is money, in deflation, gold does okay. But if silver is an industrial metal, silver hurts. So that would be a way I could be wrong. I don't think that's going to happen either, but you're asking me, so I'm telling you that would be one way that silver could really get hurt.
Okay, so I get a lot of comments in the comment section below where the people talk about silver manipulation and how the banksters will never allow it to rise above $30. And even when you look at the commitment of traders reports on COMEX yesterday or the day before, it was 750,000 ounces just dumped onto the COMEX. So, you know, what would you say to people like that who thinks that it's never going to go up, and that, you know, people have been pumping prices for a decade now and it's still not up?
It has gone up, right? It went up significantly last year. It's been over $50 before. The main point, and there's a free article on manipulation, and people can see the plus and minuses and pluses and minuses. And my attempt to be as data driven in answering this question as possible. It's also available for free on the website. It's very simply called gold and silver price manipulation. But the answer to your question is, if the manipulators are there and trying to suppress it, they have failed before, right? Whatever influence they have, whatever, you know, they try to do, ultimately they don't control the entire market. So they have been unable to completely control it. If they could just set a button and set the price, then it would still be at $5 or whatever it is that they wanted. It wouldn't be as close to 30 as it is now. You know, if 30 was the forbidden zone, then it shouldn't be 28 now. There's no reason for it to be in the 20s at all if they have that much control. So I'm not saying there's no manipulation. I'm saying the manipulators, whoever they are, whatever their goals are, they have not been able to stop it before. When a bull market really wants to go, it goes, whatever the manipulators may want, think, or do. And I think that silver has the ingredients for making that. Now here's the other takeaway point. If you believe that the silver market is so manipulated that it will, you know, the bankers will never allow silver to go to X, Y, or Z, well, then there's really no reason to invest in this market at all. It's so rigged, why bother? Just take your marbles and go home. If we did that, we would have lost out on opportunities to make money last year. I know, because you told me, Ken, you bought during the dip last March, you made a bunch of money. And anybody who thought that the silver market was manipulated and they would never be allowed to rise would have missed out on that opportunity. You know, I did similarly, and after the crash of 2008, I didn't buy bullion last year. I bought stocks last year and did okay after the dip. But what I'm saying is this market for monetary metals has enabled, you know, me and other people to make a lot more money than my mentors, Doug Casey, Rick Roll, these kind of people have made literal fortunes on these markets, despite whatever manipulation is out there. And these manipulation arguments, they're not new. I've heard the same thing for 20 years, almost 20 years that I've been in the business. And if I had listened, and if I said, oh, it's totally manipulated, it's no, you know, it's hopeless, well, then I never would have invested and I never would have made the money that I have. So I'm not saying there's no manipulation. I'm just saying, you know, don't let that stop you from pursuing opportunities in the space, because they can be spectacular.
I agree. Like, in fact, like all markets are rigged. So, you know, there's really no.
I mean, LIBOR, right? I mean, everybody makes so much about JP Morgan getting caught for spoofing, but look at the LIBOR fixing and so on. It's there's criminals out there. There are bad actors out there. There are people that have, you know, they're not interested in true price discovery or honest markets. You know, that's unfortunately common, but it doesn't mean that we stay home and do nothing, right?
Yeah. So one of your most important work is your pre-production sweet spot, right? That's the part before the mine gets into production and the value goes up significantly once it starts production. I can't remember which book. I think maybe it's some of the investment books that I read, but they talked about how if you bought stocks in December and then you sold it in January, you have outperformed the S&P for a long period of time until that particular technique, if you want to call it that, came out. And then because everybody started realizing it, then that premium that you would earn was gone. Do you think that might happen if you talked about your pre-production sweet spot work too much?
But it's too late. I mean, I've already published it. I'm known for it. It's out there. I have to confess that I didn't really think of that until after I published it.
Yeah.
I was just so excited when I discovered the relationship, when we did the first round of research and I saw the numbers. I'm like, no, this can't be right. This can't be true. And so I sent the boys back. We did more research, doubled the data set, and they came back with very similar numbers, which very briefly is roughly a double from a construction decision to first pour or first plate or first production of a mine, which is extraordinary because 95% of the companies that start to build a mine succeed in doing so. So it's really a sweet spot.
Yeah.
And it was called that. I didn't invent the term sweet spot. It was called that before, but it was assumed, since everybody knows, that the gains were modest, right? It was a high probability but low gain, but nobody had ever measured that. I asked my mentors, well, what is the gain? I don't know, maybe 20%. I don't. But nobody had it. Nobody knew. So as far as I know, I was the first one to go out and research that. My team at KC Research and we put together the data. And I was so excited because I went to Doug and I said, look at this. He's like, no, that can't be right. And I said, we've done it 3 times now. That's the data. I was like, wow. And the biggest compliment to me was when I showed it to Rick Rule, and you know how he is. He's the loan shark with the laser beam focus. He's so serious and so smart, right? And so I showed him, and he says, "Well, let me take it to my boys, and we'll crunch on it for a while." And then a few weeks later, he writes back and he says, "We could find no flaw." And I was like, wow, walking on the moon, like from Rick Roll, that was such a compliment. We could find no flaw. Wow. So yeah, I was just so excited. We published this, like, look what I found, right? And then afterwards it occurred to me, you know, maybe I shouldn't have done that. Maybe we should just have started, picking stocks in this space, making lots of money and saying, hey, look at my track record. But in retrospect, it was known that the assumption in the sector, in the space, in the industry, was that the pre-production sweet spot was of modest gains. So if I started making picks in that space, people would wonder, what are you doing? And then if it works, then after people say, oh, look at all these wins that Lobo's having, well, they're all first-time mine builders. So people would have figured it out anyway. Yeah. Right. So it's a very specific sort of niche in the market, and you can only make so many bets, and there's only a couple of them per year. Yeah. So, it would have come out eventually. So I figure, oh, well, in for a penny, in for a pound. So I have made the research available for free. Not my data, because that data you can't screen for this. You can't pull it up on a Bloomberg screen and say, who's a first-time mine builder? There's no such categories. You really have to scour the universe of miners and explorers and find these things. So I haven't published the data set, but I have published the findings. It's available for free. People can download the PPSS report. And it's very robust because, there's only a handful of these things per year. And I've got over 115 of them in the database now, going back 30 years. So that's not like a small sample that could be way off. That's actually a large chunk of the total number of companies that have done this. Yep. And the findings are very robust.
Have you found any changes in the findings since you started on this?
I'm worried about that. Like, I'm not sure yet. It's too soon to say. But there was a clear example of a pure gold mining last year was a PPSS play that just went nuts. Yeah. And what was different about it is usually the PPSS, the pre-production sweet spot gains are in a curve. And most of the gains are sort of the last trimester of pregnancy, if you will, right? Towards the end, it's getting exciting. The mine is being built. You can see that, the buildings going up. You can see the shiny new trucks, before they get all beat up in the mine. It looks so cool. People get excited and the share prices respond pure gold really leapt much earlier in that. And that could be a sign that people are saying, oh, look, it's a PPSS play. Let's get in early, right? Before everybody else comes in at the end. So instead of going up like this, it sort of went up like this,
right,
sideways. But there's been others that have continued with the same pattern. So I'm not willing to go there with one data point.
yeah,
And at the end of the day, if everybody knows it and everybody does the same thing and it reduces the gains in this space, oh well. I mean, I can't control that. But I will say this: you can't just buy any PPSS story. They do fail. Some of them fail to build a mine. Some of them build the mine, but then it doesn't work. It's a disaster. Or some of them get nationalized, or some of them, just in a bear market. The typical PPSS gain is about a double, just around 100% in the whole data set. But the ones in a bear market, the average gain is less than 30%. The fact that it's still positive is encouraging to me, but that means there's a lot more losers as well in the bear market. So a lot of things can go wrong, and you certainly don't want to just close your eyes and throw darts at the board or pick anything that's PPSS. I think due diligence still matters. That's my specialty, and I hope people will want me to help them with that.
I agree. All right, so let's switch over to the uranium bull market that we are seeing in play now. Can you tell us what's your outlook on the current uranium sector and what you think is happening here?
Sure. Well, the bigger picture is that the bottom line is that uranium is absolutely necessary.
Yeah.
Even if you think that the world should go away from nuclear power, which has been the trend for years, and we should get rid of nuclear power plants completely, that would take decades. And you can't just put thorium or vanadium or any other in the plant. You have to have uranium. So for decades, you have to have this stuff. It can't be mined profitably at current prices. There are maybe a handful of mines in the world that can make money at current prices, and it's not enough to supply the power plants. So prices are below the average cost of production, and it's irreplaceable. We have to have this no matter what. So that's a very bullish thesis, right? That makes it a when, not if question. The one caveat would be if there is another major nuclear incident, that could put the kibosh on the thing. I don't expect that. I'm not betting on that. They're very rare. And even Fukushima, no disrespect to anybody injured there, it was a tsunami. The problem was the tsunami. And if the plants had been slightly designed differently, even it didn't have to happen that way. So we learn from all of these, and I don't think, I'm a speculator, I don't think it's reasonable to expect another nuclear disaster this year or next year, by which time we should have been able to make money and move on. So that's the basis. The basis is we have to have this. We can't substitute something else, and we can't produce enough of it at current prices, so prices have to go up. Now that sounds great as a theory, but the problem with that theory is that people have been saying that for a long time, since Fukushima, in fact. What's different now is that really over the last 5 years, it started to happen. There have been some people say, oh, this false starts. It ran up in 2016 and then it came back again. That's true. But each time it goes up, it comes back to a higher low. It goes up, it comes back to a higher low. It's been doing that for 5 years. So the overall trend is actually upwards. A 5-year upward trend, that's pretty significant. And we'll see what happens this year, but it has recently started curving up again. And there are rumors, we can't put this in the bank, but there's a lot of scuttlebutt out there that the buyers, the consumers, the power utilities are finally starting to scrape the bottom of the barrel of what's available from secondary supply, and that they should be coming to the negotiating table soon to start buying from uranium miners who are not going to sell it anywhere near current prices. So I can't promise you this will happen tomorrow. I can say that unless there's another nuclear accident, I think it will happen, and the impact on uranium prices will be dramatically upwards, and the impact on uranium stocks will multiply that upward move in uranium.
Do you think there will be a short-term pullback or a buying opportunity here? Or I watched a separate interview where Rick Roll said he's going to let his greed take over and he start buying, because the upside is so explosive that you might just completely miss it if you don't get in early enough. So what's your take on that?
Yeah, well, obviously Rick can't miss it. He's been in this for a long time.
Yeah.
And also remember, Rick, he's like a bank in this space, or he's not private equity, but when he says he's buying, he's putting companies together, he's getting in investments, he's putting seed rounds in. He's not going on the open market and chasing after some stock that's up 300%,
right?
Which would be very different for some newcomer to the space. So I'm not criticizing Rick. I mean, I'm just saying that I'm not Rick. I'm not in his boots. And the typical person in the audience, I suspect, is not in that same position either. Now, if I also do own some of what I think are the best uranium plays in the market today, that makes me patient, right? I don't feel any need to chase them. And in fact, several of them are amongst these ones that have gone up 300-400% recently without uranium prices really breaking out. So that makes me very happy as a shareholder, but doesn't make me want to buy more. Buy low, sell high, right?
Yeah.
So, but if I was new to the space, if I didn't own any, and it might take off tomorrow, well, then I would be a little bit more aggressive. Now, you want to pay up for something that's just gone up 2, 3, 4, 500%. But it would make me look harder for something that might only be up 50% or 100%. I mean, it sounds crazy, but these stocks, this is the stuff that 10 baggers are made out of, or 20 baggers, or back in the day, the famous example was Paladin Energy in the 2007 run up. Your audience may have heard this, but it's fact. Anybody can research this. I'm not promising this result. I'm just saying it is a fact. Paladin Energy went from pennies to dollars, and from trough to peak, the gain was over 17,000% in that one stock. So this is the sort of thing that's possible and the reason for this is it's not specific to uranium. What's specific to uranium is that uranium is still cheaper compared to other commodities. Like, gold and silver, I think they've got a lot of upside to go, but they're not scraping around under cost of production. They're not at multi-year lows. They're at multi-year highs, even silver. Copper has just reached a nominal all-time high. Nickel is close to its highs, and lithium's up. So many things are up. But uranium is actually a buy low, sell high proposition. It is below the cost of production. And that's pretty unique in the commodity space. And the stocks multiply the moves of the underlying commodity. That's why we like speculating on resource stocks. They multiply the moves in the commodities. So if you're a bull on uranium and you're willing to speculate, you want leverage to that, you can buy just uranium. Don't stick it under your bed. There are ETFs for that. But if you want leverage to it, you buy, stocks that will produce it or have a big discovery or are working on a big discovery. And there are some of these that are available that have not yet gone to ridiculous prices. So if I was new to the space, I would look for something like that. If I already had some stocks, then I would be more patient looking for a correction. And uranium is upwards over the last month, but it hasn't really broken out. So there is a chance here for some significant correction. And the best news might be that it could come from outside of the uranium space. We have seen in the past, in this 5-year upward trend, we've seen times where uranium prices are going up, but the stocks are tanking because the broader market's tanking. Like uranium stocks sold off last year in March. Uranium stocks sell off when other stocks sell off because they're stocks and they're seen as industrial. They're seen as energy plays. So if energy's down, oil's down, you'll see uranium stocks sell off, even if uranium metal is actually up at that time. Those are great buying opportunities. And as volatile as our markets are, I mean, as you and I speak, we've seen some big fluctuations in US equities this week.
Yeah.
Who knows? The next panic could set off. Maybe it's not another, 2008 level of waterfall, but even just a 10 or 20% correction in mainstream equities would put these uranium stocks on sale again, which I would think would be a fantastic buying opportunity.
And does the pre-production sweet spot also apply to the uranium miners?
Yes, it does. I have less data. I have to tell you that in the data set, there's only a handful of uranium plays in there. The pattern is still there. The most of the data is for gold, secondarily for silver. Oddly enough, I think I have more uranium data than copper data, because copper mines tend to be big, and you tend to sell as a junior. You sell your discovery to a major, and the major builds it, so then it doesn't apply. The PPSS is only first-time mine builders. When you go from exploration to production, that's value added. So that just doesn't happen as much in copper, but it does in uranium.
So you definitely see more asymmetry in the uranium bull market compared to silver, right?
Yes.
Okay. Are there different things that you should watch out for when you're conducting due diligence on the uranium versus the silver miners? Are there differences there? Because, the standards are always, the management team, the quality of the asset, jurisdiction, the financials, but are there specific things that we should look out for that's different in uranium versus silver?
I think the basics are pretty broadly applicable. If you look at, Doug Casey's famous 8, or I think there might be 9 Ps resource evaluation. I still use that formula that Doug taught me. That's available for free, not on my website. If you Google Doug Casey P's of resource evaluation 789, pick a number. It's a free download out there. That works across all things. The things to watch out for specifically to uranium are really political risk. There are mining jurisdictions, like in Australia, there are places that are happy to have copper or gold mining, but not so happy to have uranium mining. So you want to watch out for that sort of thing. Not really. It's a metal, it's mining.
So which market do you think will rally first? Because we're on the verge of a breakout with silver here. So do you think silver will rally first before uranium, or uranium will go first?
I have no idea, my friend. And if anybody told me they knew for sure, I wouldn't believe them. Let me say that I don't care. I'm bullish on both of them. And I would rather be early on both of them. Both of them have explosive potential. Uranium, I think, has the bigger alpha, but I also see it as more risky in case anything could go wrong. Like I can't see silver going to zero, but I can see a lot of these uranium stocks just crashing if there was another accident. And I don't want to overstate that, because those accidents are rare. But I don't want anybody thinking, oh, Lobo, you promised nothing could go wrong. They could go wrong. I see the uranium stocks in my portfolio as the high risk end of my portfolio. And so that's different. I see, bigger alpha there, but bigger risk. And so I'm happy to have both. I don't need to pick between one and the other. I can have both. And I would rather have them before the next breakout than after. That's the main thing. That, a day late could be, a painful experience here.
Yeah, that kind of answers my next question, which was, if you're new to the space and you had 100K to allocate, like, how would you play this bull run? Would you allocate equally between the two? Or maybe try and time it and put 100K to silver first? If it's going to break out, then take a free ride once it's up, double, and then rotate into uranium, because uranium might not be exploding so soon, but we never know, right?
Yeah, you never know. So no, it feels like silver and gold are moving now, right? So you want to jump on that. But honestly, that's not a rational decision. That's FOMO, right? It feels like, oh, they're moving now. Oh, I want to get in on that. So I would look for the best opportunities. I wouldn't say, okay, well, silver's happening now, so I'm gonna jump in silver now. I'd say I want both of these. Where are the best buys? And honestly, a really great speculation, and not just an okay one, or not just a company that's in this space, but a really great speculation, ticks off all 9 Ps, right? It's got everything lined up, all the ducks in a row. Those are hard to find. So if I find, right now, if I found 5 in uranium and only 1 in silver, well, I would buy the 5 in uranium and only the 1 in silver, because I want to buy a great speculation. I don't want to buy one great one and 4 so-so ones just because I want to allocate 50% to silver. That's crazy. Don't come at this like a spreadsheet, like, oh, I got to have this and this and this and this. There's no substitute for due diligence. There's no substitute for quality. There's so many ways these things can go wrong, that you really want to speculate on the very best shot you have at making money. And by the way, I wouldn't just limit it to silver and uranium right now. Those might be our favorites, or the hottest metals right now. But ideally, you want to diversify, because we can be wrong. And what if we're wrong twice? Well, then it'd be good to have something else, right? It'd be good to have some copper plays or some oil plays if those industrial minerals do better. Or if, like, the divergence between gold and silver we hypothesized earlier, if that were to happen, it'd be good to have some gold as well. Ideally, you want a basket of different things, and especially things that have contra-cyclicality to them. So like if the monetary metals will do better in a time of crisis, but the industrial metals won't, then you have some counterbalance there. Whereas if you're all in on just the monetary metals and everything calms down, right? It turns out the powers that be saved us, the economy's fine, all the money printing doesn't matter. I don't believe any of these things, but suppose that happened, right? and gold and silver just, go down. Well, then having investments in uranium and other industrial metals will go up, and I'm better off. Silver and uranium somewhat balance each other, but silver has a lot of industrial component too.
Yeah.
So I just don't think two metals is enough diversity for a resource portfolio.
Do you have any comments on the oil and coal market? Do you do any research there?
Yes. In fact, I just bought my first oil and gas play in the independent speculator since I launched in 2018. I've been bearish on the economy in general since before COVID, and not sure that oil was going to come back for a while. And we were in an oil glut situation for a long time, arguably still so, right? We've got OPEC plus involuntary supply cuts. Those are still there. They're fiddling with them, but they're still there. So it's not like the world is in short supply. But I do think that right now there's a case for this year in the post-COVID surge. I mean, and it's not just me saying that. I'm not unique in saying that, but there's data, right? You look at Airbnb says their bookings are way up over the summer. The airlines, Ryanair, and some of these others, they're saying their bookings are way up over the summer. So unless some of these new varieties of the virus prompt the governments to put the whole world on lockdown again this summer, it's a very high conviction trade on my part that energy prices, and particularly oil and gas, will go much higher over this summer. Now, what happens later, right, after we see what the long-term damage from all these COVID shutdowns is, that's another question. But that all those people who've been locked up for a year and they want to get out, they want to drive around and go to restaurants, they want to fly to Bali or Tahiti or Paris or whatever, I think that's going to happen. And that's going to push oil and gas prices higher. And so I have personally been willing to put my money into that speculation, but I see it as an unusually short-term trade for me. I'm more of a buy and hold, not hold forever, but buy and hold until we get the answer to the unanswered question. I'm not a day trader, but this one, I don't think I would hold any oil and gas after this fall. After the surge comes up and shows signs of peaking, then I think I would step out of the way and see where things settle, see how things settle after the surge. But I think the surge is a reasonable speculation to place some bets on.
We're almost at an hour, so I want to quickly wrap up and get as much as I can in. So I know you have 5 kids. That's amazing. Yeah. How would you teach, or have you already started teaching them about investing and speculating, and what are the key principles that you would transfer to them to make sure they're successful in their own lives?
Well, that's a very interesting question, and the answer may disappoint you because it goes much deeper than that. I have made no effort to try to get them to follow in my footsteps or to become investors or even entrepreneurs. I think being a self-confident, self-centered, but in a positive way, I mean, like centered in your being, happy person, and happy with yourself, feeling competent to live in the world and make your way in the world. These are our cardinal necessities that I tried to teach and exemplify for them and help them embody. And how they apply that, that's up to them. It's funny, most of them have turned out to be artists, dancers, painters, creators of different types. Only one of them that I know of has invested in gold and silver. And that's okay. I don't care what kind of walk in life they pursue. I just want them to be happy. What parent doesn't? Yeah. But my methodology for that was we homeschooled and then unschooled. And I tried to make their world as rational as I possibly could so that they felt competent to deal with this world, because the world can be so crazy. We'll see how that works. They're just all starting out on their professional lives, and we'll have to see how it all plays out. But my goal was to encourage self-confidence and self-sufficiency, and then career, whatever they want.
So how difficult was it to homeschool them? I'm not sure if that's a norm where you're coming from, but from where I am, it's very uncommon to see people homeschooling their kids. But that's something I definitely want to do for my own future kids as well, because I feel like when you go to school, it just becomes very monotonous, and you somehow lose the ability to think really critically and independently. You're kind of being forced to conform to the whole system. So how difficult was it?
Or run into trouble. I was I was never quite kicked out of school, but I got terrible grades in many of them. I was in the principal's office all the time. I got suspended. I got detentions. I was bored, and I hated being told what to do and pushed around all these stupid rules. Um, so you know, it's perfectly natural for me, but obviously it's not something that everybody can do, or not easily. And some families make great sacrifices where, you know, one parent or the other will forego their career to become the educator for their children. I just had the great fortune of being a writer who could work from home, and and then to have partners who shared that same vision. And so I was able to put the time into this that, you know, if I had a 9-to-5 job in an office or a factory or something, I just wouldn't have been able to do. And honestly, once I got going with Casey Research, it was like taking a drink from the fire hose, right? I was so busy, even though I worked from home when not out, you know, kicking rocks in mines and stuff, that I had to rely on my partners. But it's really cool. I can tell you, you know, I remember very vividly experiences where I would explain something to one of my children, and it's like the cartoon where you can see the light bulb, like the light in their face when they get it. They understand the concept of it, right?
Yeah.
And it's so cool. Like, you know, the feeling of having successfully transmitted that knowledge, that power that comes with that knowledge, that understanding to your children. It's an amazing feeling. And if you can have that yourself, you know, why would you give that to some stranger in a factory they call a school?
I feel like this is a common trait in all the people who invest in the gold and silver space. We're all like rebels underneath, and like we don't like playing by the rules. For those people who would like to find out more about your amazing work and what you do, where can they go?
The website is independentspeculator.com. And we do have a free weekly digest that goes out. It's a free email newsletter. The content, it has original analysis every weekend. It's not generally published on the website, so you do need to sign up for the email. If you do, I promise we won't spam you. I don't sell my list. I don't send out a daily flood of advertisements. You get one email per week. And it will guide you towards the other things. I publish all kinds of free stuff. There's special reports on the website. There's all kinds of things there. But the digest will point you at the new work and, you know, what I think is really important, as well as my latest analysis of what's going on in the market. I'll just leave it at that. That's the easiest way to get started.
Amazing. And I'll put all the links in the description box below. So remember to like and share. Thank you so much for spending some time with me, Lobo.
Well, thank you. It's been fun.